Hi everyone, welcome into this segment of market breakdown. Yeah, so today you're getting to see my face. Um, welcome. So we're going to be doing something. We're going to be doing something different in a good way today. We're going to be starting not like a new series, but we're going to be twisting the series that we've been doing into something that can actually help us to actually scale up faster in the trading business. So, what I mean by this is we've been trading for a while now. I've been coming here doing market breakdown, and then we've been taking the trades and we've been making money. But this time we want to tailor our trading to Propfirm. We want to tailor our trading towards Propfirm. Like more like we're taking prop trades. Yeah. So I did a Twitter space. Held a Twitter space, or should I say an X space, depending on whichever one it is that you choose to call it. I held a space on the X app, formerly known as Twitter, few days back. So during this space, I talked about an idea of like just like we on my YouTube channel that I'm going to start. I'm going to get an account here, which I did get the account I think yesterday or day before yesterday. I can't remember precisely when, but I got the account, and then when I got the account, I made a tweet concerning the accounts. By the way, you will need to follow me on X for this series. So what basically going to be doing is that I'm going to be coming on here. I'm going to be doing the normal analysis that I've been doing. So we're going to be trading the analysis on a prop firm, and then we're going to make trade it until we're able to pass phase one. We're going to continue again, trading more analysis till we pass phase two, and then taking more trades until we're able to like, oh, now that we're funded after passing phase two, then we're going to start taking more trades and then start making withdrawals for ourselves. So that's basically what this series is going to be about. So this, like, we're focusing all our trades now on taking or on more like we're trading prop accounts. Yeah, it's more like we're taking prop accounts now. So we're not trading it like we're taking personal accounts, which means we're going to be employing a very good risk management. So we're not going to be myself. What I risk on my prop is 1%. So I'm not going to be going higher than that, and I'm not going to be going less than that as well. I'm going to be taking my consistent 1% risk like I've always been doing. I'm going to be sticking to my 1% doing this series. So you guys will have access to the account. Yeah. I dropped the screenshot of the account already on my X. Like I said, you need to follow me. The link is going to be down below this video. Just go to the description and then check down below. You're going to see the link to my X account, or to my Twitter account. You're going to see the link to my IG account as well, and some other social media platforms. So do well to follow me on these platforms, and then I'm going to be showing whenever it is that I place the trade, I'm going to come on X, make a screenshot of it, and then post it like I'm in the trade already. That's the trade I'm going to be analyzing here. So I'm going to drop a screenshot of it. So you guys are going to get the history of a progressive history, or whichever one it is, whichever way you choose to describe it, of how the account is going, and then how we're passing the account, and then when we're funded, and then how we're making money from it. So with that being said, I'm not going to waste too much time. Like I've already said, since we're trading prop, we need to actually employ good risk management. Number one, actually, we need to look for the best trades that are about to like trend, or a trade that is a pair that is trending already. We just need to like go into such pair, like manage our risk, join the trend, manage our risk, and then have a trade management plan, then follow through with this consistently until we're able to pass phase one, go on to phase two again. Good trades, good risk management, and then good trade management skills. So we need to have a plan for every trade it is that we're going into. This is what we're going to be doing in the trades, and then no matter what happens, that's what we're doing in the trades. So basically, that's the whole thing. So without wasting much time, we're just going to dive into my screen. Like you're already seeing, we're going to dive into the screen, and then I'm going to start showing you guys I'm going to start showing you guys the things that we have for today. So today we're going to be looking at AUD and then we're going to be looking at GBP We're going to be looking at AUD and then we're going to be looking at GBP. So basically those are the two pairs that we're going to be looking at in the course of this in the course of this video, in the course of this market breakdown. Yeah, I think this should be episode 10. Wow, we've actually gone far. So this is episode 10. We're going to be looking at this in. So AUD I already did an analysis on it. I already analyzed it during the last, what's it called? During the last market breakdown. I already did an analysis on it. I analyzed GBP JPY as well. I'm already holding a trade on GBP JPY buys. So we're still waiting for AUD JPY, but it looks like it's almost here. So we're just going to like check it and then define our entry. You guys will be able to follow me through it, and then we're going to go in whenever it is that the market is set. So without wasting much time, let's just dive in, like I said. So I am not going to do too much on what's it called, on AUD JPY. Well, let me start from the beginning and then analyze the whole thing. First off, I'm going to take off these ones from my screen. I was explaining this to someone, so I had to like bring it up. So like first things first, since we're doing a multi-time frame analysis, or if you choose to, you can call it a what's it called? You can choose to call it a top-down analysis. So since that was what we're doing, we're going to be starting from monthly time frame. Then we come down to weekly time frame. Then from there we go to daily time frame. Then 4 hour time frame where we're going to be picking our entries. So from what we can see on AUD JPY, it's been trending to the upside. AUD JPY has been trending to the upside. However, it came and then broke this trend line, and then it started looking like, okay, this uptrend is in trouble. This uptrend is looking like it's in trouble. But then you already know, whenever it is that a trend line breaks, there's a chance that two things want to happen. There's a chance that two different things want to happen. Number one, it's either the market is actually like going for a bigger retracement and then maybe now faked out below the trend line or above the trend line, depending on the initial trend of the market before. So it might just be a fake out. So one way you can confirm that it's not a fake out is that you need to wait for a pullback. Then when the pullback happens and then the market now looks like it wants to continue again in the direction in which it has broken into, that's when you now want to say to yourself that, okay, this trend is actually truly over. Then you now want to jump into the new trend. So for this, we can see that AUD came below this monthly time frame trend line. It came below it. Let me take out some of my tools so that we can be able to see well what's happening on. Is this in? Let me take out some of this. Okay, so now I believe my chart is a little more clearer than it was. So now okay, so if you look well, okay, something actually interesting actually happened. So if you look well, you're going to see that the last month's candle that closed this month that just passed. So by the way, happy new month, guys. So if you look well, you're going to see that this previous month, the candle that closed actually closed as a dodgy candlestick. So what's this? Yeah, it's a dodgy candlestick. And usually if on the monthly time frame, we're still on the monthly time frame, if a bullish candle continues after this, if a bullish candle closes and continue after this, it means this market has actually like given us a morning star, like another candlestick. This actual candlestick really signifies indecision, but if it's followed by a bullish candlestick, that means it's now representing a morning star, which signifies a bullish momentum. So it means if a bullish candlestick is actually formed after this one that's closed, if a bullish candlestick form, that's for this next month, if a bullish candlestick should form, that means the progressive candles that will even follow through after this, after the bullish candle that closed, is going to be more continuation of bullish to the upside, and then the trend has actually been bullish before. So everything that has happened to the downside now might just be a fake out, like I said earlier. So like let's progress to the weekly time frame and then see if the market has actually like is giving us a sign of maybe a pullback to the trend line, or is giving us a sign that the market actually just came below the trend line and then the next thing it wants to do is just like continue back above the trend line and then start going up. So with that being said, let's just like go to the weekly time frame and then see what's happening. Okay, so from the weekly time frame, we see that the market is still trading below this trend line here. The market is still trading below the trend line, and also, but if you look if you look, you're going to see that the market actually gave a morning star candlestick pattern, and then it looked like it's the market gave a morning star candlestick pattern, which usually continues with a like I said on the monthly time frame, a morning star candlestick pattern. After that, it's usually continued by a series of bullish candlesticks to the upside. However, this trend line is still holding it to the downside. This trend line is still very strong and holding it to the downside. But there's something that is happening on the daily time frame that is making my bias to be solid with a bullish momentum on AUDJPY. So let's go to the daily time frame and see what's happening. Let's check the daily time frame and see what's happening. So for the from the daily time frame, as you can see here, as you can see from the daily time frame, everything it is that is happening, there's a pattern that is showing up. Sorry, something is going to pop up on the screen now. Let me remove it and then we can continue. Okay, so from the pattern that is showing up on the daily time frame now, it's looking like a range, and then the from the weekly time frame and the monthly time frame, and also the trend that has been happening in the market before, it's been giving us series of bullish momentum. So like I said, everything that happened on this time frame on in this market can just be that the market went for a massive retracement to the downside, which now broke below the trend line. And then if that wants to happen, this range is now going to hold it, plus this trend line from the monthly time frame is going to hold it back down below the range, which is going to be this hash bar. It's going to like hold it back down below the range, which is going to be this hash bar. Let me point my arrow to it so that you guys can be able to get a better understanding of what I'm saying. So if this market wants to actually go bearish, I'm going to be waiting for the market to actually break down below this hash bar. And then if I see a breakdown below this hash bar, that means okay, this market is actually now looking like it wants to like point down, it wants to go bearish. But this market should come probably on the daily time frame or the 4 hour time frame candle close, and then even the 4 hour time frame is candle close is okay for me. All I'm going to be doing is if I see a 4 hour candle close above this range, which is lining up with this trend line, all I'm going to be saying to myself is okay, now this uptrend is now confirmed, which means everything it is that happened to the downside is just a fake out. Everything that happened to the downside is just a fake out. Then if I see a 4 hour candle close above this trend line and this range, I'm going to be jumping in for buys. My first target is going to be this major level, and then my overall level target is going to be 107.450. That is going to be where my overall level target is. Now this second green bar is going to be a potential place where I'm going to be adding more opportunity, more buys to the listing, more buys to the trade, So what I'm going to do when the market gets to the first level target is I'm going to be closing partial position, which is 50% of what I'm holding, and then I'm going to be moving my stop loss to break even. So even if this major level wants to decide that it wants to hold and then push the market back down, then I already took something. I've already taken something from the market, and not only that, my risk has been moved to break even, which means I'm now risk free. And then during the time when I'm risk free, if my second trade actually like lines up, or if the second trade, if I'm even to get an entry from the second trade, it means I'm going to be entering the second trade, the second pair that we're going to be looking at. It means I'm going to be entering it first before this. But the point I'm trying to make here is that I'm going to be making sure I manage my risk very well, which means whenever it is that before I go into another trade, I've already removed my risk from a certain trade, and then what I'm going to be doing is a transfer of risk to another trade. I'm just going to be transferring the risk from the first pair. I'm going to be transferring it to the next pair, and then with that, I'm able to keep my risk very low, and then I'm going to like progressively make most of the trend it is that the market is presenting to me. So, like I've said, first target at this major zone. Whenever it is I see a 4 hour candle close above the descent, above this. Whenever it is I've seen a 4 hour candle close above this range, which is happening. Let's go to the 4 hour time frame so that you're going to see it better. You're going to understand what's happening better. We're going to see better what's happening. I don't know. Sorry, I don't know why it's loading very slow. Okay. So now, as you can see from the 4 hour time frame, you're going to see that the range is actually very, very clear. Let me remove this trend line. Let me remove this trend line. If you want to be more conservative, you can bring back the trend line and then everything. But for me, I think the range is not even. I think I like I said in the beginning of the trade, we need to go with pairs that are actually very solid. So it is until I see a 4 hour candle close above the range and above this trend line, that is when I'm going to buy. But immediately a 4 hour candle closes above these two levels, I'm going to be I'm going to be entering the buy. My stop loss is going to come below the range, and then my first level target at 101.000, 101.000. That's where my first level target is going to be. My overall level target at 107.450. That's where my overall level target is going to be. At 104.550 is going to be a potential place where I'm going to be entering another trade. So I don't know what's going to happen at 104 point. In fact, I don't know what's going to happen in like the trade. But then I know what's going to like. I know that consistently, if I go with pairs that actually line up with my edge, I'm going to consistently be able to make money from the market. That's just the idea of everything. So you need to just make sure that you go with what actually lines up with your edge, and then after going into a trade that lines up with your edge, the next thing you can do for yourself is to manage your risk. Should in case that actual trade doesn't go as planned, you know that okay, the next one is going to be what is going to like cover up for your loss, and then it's going to probably give you more profit after covering for your loss, and then maybe the next trade after that is going to now be what's going to like give you the profit it is that you want from the market. And then progressively like that, you're going to see that if you're going for the best trade, if you're managing your risk, and then you have a plan to actually take your profit and then like manage the trade whenever it is that you're in the trade, you're going to see that progressively you're able to make money from the market. So that's just the idea of how to like trade it and then trade it well. So like, with that being said, 4 hour candle close above these levels, stop loss for entry, stop loss below the range, first target at the major level, and then the next major level. I just plotted with the green bar. The next major level is at 107.450. So that's my second level target. So with that being said, we're done with first pair. 70 minutes. We've already spent so much time on this pair. We've already spent a lot of time on this actual pair. So without wasting much time, we're going to be looking at GBP We're going to be looking at GBP which is going to be one of the I have a lot of pairs on my watch list. So like I said, GBP I'm already in. It's already in. I think you should be in profit. I don't even know what the market is doing. Let's just look at it. I don't know what is doing necessarily. I've not really checked my chart since I got into it last. I love to like just enter a trade and then just let it do what it wants to do. I can't control the market, but I can control what I can do, and the best I can do is just like follow my trade management plan. So that's just it. I'll just have to like wait for the market to do its thing. So like for GBP which is going to be the second pair we're going to be looking at. So first things first, I'm going to come to monthly time frame. First thing first, to the monthly time frame. So as you can see on this time frame, as you can see from this monthly time frame, everything is pointing to the downside. Like we've been having a series of lower lows and lower highs, lower lows and lower highs. So the market has been coming down ever since 2000 and since 2008. Yeah, since 2008, GBP CHF has actually been trending to the downside. GBP CHF has been trending to the downside since 2008, and you don't want to go against that trend. You don't want to go against the trend. That's one of the benefits. Like that's one of the things that's going to help you to be constantly profitable. Stay in line with the trend. So with that being said, there's a concern. However, there's a concern I have on GBP CHF. So the concern is that if you look at this, it's looking like a potential shoulder to this, which is a head. Now, if the market comes here, which is going to be the next point where it might actually form a shoulder, there's a point that from here the market might actually break like just blow to the upside and then start moving like crazily to the upside, which like the reason for this is because this it will now become a chart pattern. This is actually going to become a chart pattern, I believe you already should know by now if you've been watching my previous video, or if you're part of my student on Exodus Institute. So you should already know this by now, especially if you're my student, you should know this by now. If you're my student, you should know this by now. So like it's actually going to become a an inverse head and shoulder pattern, and then blow to the upside, thereby giving a change in trend. So my plan for the trade is going to be that until this level is actually taken out and then I see a pullback to it, then a continuation candle, that is when I'm now going to say, okay, the trend to the downside actually still holds firm, and then we should continue with it. So with that being said, I'm going to continue to with the weekly time frame, since I've seen that every other thing is pointing to the downside. I don't want to go against the trend. The only time it is I want to start going against the trend is until you see that the guide that has been holding into the downside, which is your trend line, it now has been invalidated. So, but for now, the trend line is still holding, and then the potential inverse head and shoulder pattern is yet to form. So you want to make sure that you're still sticking to the bias of you like trading the market to the downside. You want to make sure you're sticking to that. Now, if you look at this, it's also giving us another chart pattern for bearish momentum also on the weekly time frame, which means even every like there is a more chance for the market going down than there is for the market going up. There's a more chance for the market going down than there is for the market going to the upside. However, there's something that happened, and then is you want to make sure that you're checking for everything it is, so that you can be able to like arrange your you can be able to like build the probability in your favor. You want to make sure you stay in that very point. It is that whenever it is that market has cleared out every odds for you, or every reason why it's not going to go your way, that is when you now want to start deciding on, okay, now every other reason why the market is not going to go my way has been cleared out. Now the next thing I want to do is jump into the market, because I've seen that the market is clear. However, even after while you're doing that, you want to still make sure you're managing your risk. You want to still make sure that you're managing your risk. So with that being said, I'm going to like bring out my Fibonacci and then draw my Fibonacci from swing high to swing low, from swing high to swing low. So if you draw a Fibonacci from swing high to swing low, you're going to notice that the market actually came into. Can you stay one place? Okay, you're going to notice that the market actually came into the 50 fib, and then it gave us an evening star, which signifies a movement to the downside. An evening star candlestick pattern signifies a move to the downside. So now give us an evening star between the 50 fib and the 0.618 Fibonacci region. So that happened. However, I'm going to like to see this market actually come to the actual neckline of this inverse head and shoulder pattern. I'm going to like that the markets come to this. This thing should leave my screen now. Sorry. Okay, so I'm going to like that the market comes to the neckline of the this thing before it start rolling now. But then, like we've said, it is until this minor level that is going to be the potential shoulder for a potential shoulder for the inverse head and shoulder that we've seen on the monthly time frame. It is until it's like invalidated before we're now going to start seeing itself. So if it likes, it should go to the neckline. If it likes, it should just continue falling from the evenings. The Fibonacci can actually become the resistance that it needs for it to now break below the minor level and then start going down. Point is, until that level is broken to the downside, and then it is until I now see a pullback and a continuation candle close below that level, and I want to start saying, okay, it's time for me to jump into that trade. So until then, I'm going to be folding my hands and just like observing the market from time to time. I'm just going to like go stay off, check back again to see if I've actually been able to like see a confirmation for what it is that I want to see. So like with that being said, the next thing to the daily time frame. I've already done all analysis necessary on this, but then let's just see what the daily time frame is looking at. Like, so let's see to the left side. So the more you go to the left side, the more you're going to see that this level has actually been like reacting. The market has been reacting to this level for since a very long time, and you don't want to like mess with it. This market can just actually get to this level, become the shoulder that we talked about on the monthly time frame, and then blow to the upside. You don't want to like mess with this level. You don't want to like play with this level. It can actually become a guy that the market will come to and then respect. However, the trend is down. Number one. Number two, weekly time frame is giving us a double top, which signifies a move to the downside. So now, whenever it is that I see a break below this guy, whenever it is that I see a break below this minor level, this guy right here, it is until I see a break below it and then I see a forward time frame pullback, and then I'm able to draw my counter trend line, and then I now see a continuation candle close below the counter trend line. That is when I'm now going to say to myself, okay, now this market is ready. Then upon the continuation candle close, I get into the market, stop loss below the above the previous high, and then this thing, just like I've drawn this thing here, this position size calculator. I'm not going to be trading based on this, but I'm just plotting it here now so that you guys can be able to get the idea. This position size calculator is not what I'm trading based on. It's until I get my confirmation, which I've already just explained. So I want to wait for my confirmation, then I'm going to get into the trade. First target is going to be here at this green bar. Overall level target is going to be at this next major zone. So like that is how I'm going to be taking this trade. So we've already spent 27 minutes, and yeah, we've been able to do justice to the two pairs that I said we're going to be looking at. So I believe with this you can actually be able to like make better decisions on what trade it is that you're supposed to be taking on your proper accounts, and then be able to like constantly make profit from it. So I am going to be making sure I'm going to be taking just these two trades. Number one. Number two, I'm going to be managing my risk. Number three, the plan it is that I've already explained in the course of this video is what I'm going to be following in the trade. So with that being said, I am going to like say my goodbyes here. Okay, before I say my goodbyes, let me just give you guys, I feel like it's time I start pushing this out, because it's actually been of great help to most people around me. So it's time I start pushing it out to my social media audience as well. So I think I also mentioned it in my last video, so but let me just go into it. We now have a platform, or should I say an academy, an institute here, where people can actually come onto and then learn how to trade. Not just how to trade, you can also learn other digital skills as well. Let's say you want to learn graphic design, you want to learn, we're still working on some of our what's it called, we're still working on some of our courses, tutors. So the rest of the tutors are still working on some of our courses. So as soon as the courses are done, it's going to also be listed on the institute as well. So we have we have just two courses: graphic design and trading course. So that is the two courses that we have for now. Hey, yeah, I forget, yeah, Tesla is also almost done. You can watch the previous video, or I dropped on my YouTube channel. You can watch the previous video so that I can be able to get the entry on Tesla. Now you can enter that on your personal account. You can enter that on your personal account. If you have a broker that allows you to trade stock, you can just enter that and then make most of it. Make sure you're managing your risk. Make sure you're taking the best trades. Manage your risk, and then just have a trade management plan. And it's going to be hard to follow, but just try your best to follow it, and then you're going to see yourself scale up gradually. So that's it. You can just like sign up to the institute, learn. You're going to get access, you're going to be able to get personal access to me if you sign up to the institute, and then you're going to get a good guide, and then grow yourself into becoming a better trader as well. You're going to be able to grow yourself into becoming a better trader for yourself as well. I believe you've been able to like enjoy the series of teachings it is that I've been dropping on this channel. So if you've been able to enjoy that, I almost forgot, please do well to subscribe, guys. Please do well to subscribe. Drop subscribe. The channel needs your subscription. I need your subscription. So do well to subscribe, drop a like so that the YouTube algorithm can recommend the video to other traders as well. Then also do well to drop a comment if you've been able to like understand the things it is that we've talked about or that I've taught you guys during the course of this market breakdown episode. So it's episode 10, and here's where we're going to be doing the roundup. Bye, guys. See you in the next episode, or see you on my social media platforms. Bye, guys.